new trend that began in March of 2020. We're starting it off with an impulse wave, and so this would have some bullish longer term implication. From the May high, we've got some real nice harmony and geometry taking place within this move lower. I'm having a hard time stuffing a 5-wave motive wave into this initial decline. And since I can't stuff a 5-wave motive wave into this decline, that tells me this must be a corrective wave. This ABC move off of the August low is putting a little headwind into this new uptrend. And so what I think we're going to see happen is we will get another leg higher, probably up to the 77 cents, and then we'll come back, retest this 71 cent low, possibly work ourselves back down into the 69 area. Hi traders, this is Jeremy here with See the Waves, and we're going to take a look at the Elliott wave analysis for the Australian US dollar. Now, I'm going to start off with the pandemic low of March 2020, and from that low, we can identify a nice impulsive wave labeled 1, 2, 3, 4, 5. Within that impulsive wave, we can see the subwaves within wave 1 subdividing as a nice impulse, the subwaves of wave 3 subdividing as a nice impulse. So everything is looking really good as far as the larger impulse wave from the March 2020 low up here to this February 2021 high. As a matter of fact, if we throw some Fibonacci retracement levels out here, we can see that the previous 4th wave of this larger impulse is coming in right near the 38% retracement level, which is a common wave relationship that we see within the impulse wave. So what this means is we're starting off a new trend that began in March of 2020. We're starting it off with an impulse wave, and so this would have some bullish longer term implications to it. Let's zoom into an intraday chart, 4-hour chart. So from the this would be the February 2021 high. Looking at a wave picture that looks like this. Now, starting off from the February 2020 high, things get a little squirrely. It's not a real organized move to the downside. So we're going to come back and talk about that in a minute. But from the May high, we've got some real nice harmony and geometry taking place within this move lower. So for example, we've got an impulse wave from May 10 high down to the August 20 low. And within this impulse wave, we've got an extended 3rd wave. We've got a triangle forming within each of the 4th waves here, subdividing out real nicely. So this has some really good harmony and geometry taking place. So for example, let's see, if we measure out the length of wave 3 versus the length of wave 1, you'll notice that this wave 3 comes in pretty close. Let's change the color here. It comes in pretty close to the 2618, which is a common Fibonacci wave relationship. And after you get a completed impulse wave, a lot of times you get a retracement back into the territory of the previous 4th wave. So we did get a little rally higher, ended up carving out another triangle pattern, and then plummeted down to new lows. So we've got some wave relationships taking place between wave 3 and wave 1. Also, we've got wave 4 is subdividing the whole impulse, and I believe it is this one here. So within this wave 1, 2, 3, 4, 5, you can see wave 4 is subdividing the whole impulse right here at the 38% retracement level. So very good harmony taking place in geometry within this down move. I'm confident this is an impulse wave. Now, what I'm not confident in is what in the world is going on over here. This is just not making any sense at all. I could come out here and I can see, we've got like a, 1, 2, 3, and then boom, we rally up to a new high that's above this high right here. Okay, so that looks like it could be a three-wave move. Another possibility is we could have maybe something like a wave lower, and then this is all of a corrective move higher, but then we just have another wave lower, and as you can see, it's still just a three-wave move. So no matter how you look at this, or at least how I'm looking at this, I'm having a hard time stuffing a 5-wave motive wave into this initial decline. And since I can't stuff a 5-wave motive wave into this decline, that tells me this must be a corrective wave. Let me remove this out of the way and let's give it another look. Some might argue, hey, you know what? Maybe this is like a leading diagonal, something like this. But the problem with this leading diagonal, so what I'm drawing here is you draw trend lines over the extent of wave 1 and 3. So somebody might call this a leading diagonal. For two reasons, I would dismiss this as a possibility. The first reason is that you've got wave 4 surpassing the end of wave 2. So that just completely negates it right out of the gate. Also, an expanding diagonal is extremely rare. And so usually there's a better way of counting it. And so if we extract the diagonal out of this picture, like it's not possible, then it's not an impulse wave, it's not a diagonal, so that tells us it must be corrective. So for those of you traders that are new to Elliott wave theory, basically we can take the patterns and we can place the patterns into two buckets. In one bucket, you've got an impulse wave and you've got a diagonal, and those are called motive waves. And then in the second bucket is corrective waves. So if the wave is not motive, then it must be corrective. And when a wave is corrective, like what we are seeing here, when a wave is corrective, 90% of the time, you're going to get a complete and full retracement back up to the origination of the wave. So this pattern right here sticks out like a sore thumb to me and suggests that there will be a time in the future when Australian dollar is trading above 80 cents. Right now it's at 73 cents. Now, will it go lower before it goes higher? That's a question we'll need to check out. Let's unpack this a little bit further. Let's go down into a 2-hour chart and let's see what we've got going on within this rally and then the subsequent decline. So within this rally, one thing I can see is it looks like we've got just an ABC rally going on. ABC. Within ABC, it should subdivide as a 5-3-5. And so we've got 5 up, 3 correction, 5 up, ABC rally. So this is a corrective rally is what it looks like. It's possible that this could be wave 1 of a larger diagonal. And then that means we're going through wave 2 of a larger diagonal. And this could lead to wave 3, kind of a messy 3, and then 4 and 5. All right, so if I zoom out a little bit, this is what we could be looking at, is possibly a diagonal higher, 1, 2, 3, 4, 5. It would just grind higher. I would consider that to be lower probability. We may move higher, but I'm not convinced we're going to be moving higher in a diagonal type of form. So what may be going on here? Well, so here's in summary what we're looking at. We've got a corrective wave back here, followed by a nice harmony and geometry within this impulse wave lower. We've got a corrective wave higher, followed by a corrective wave lower. So we're probably going to get another wave higher that is going to be a cousin wave to this one. So I suspect we're probably going to get something that moves up in here, up into the 76, 77, maybe even the 78 range. So around here, let's just call it 77 cents. And then from there, I think we may get another move lower. that retests this low and possibly comes in to lower levels. If I zoom out on the 4-hour chart, this will make a little bit more sense. And if I add back the Fibonacci retracement level, okay, if we take a look, just a second here, let me get rid of some of this chart art. Okay, if we take a look on this 4-hour chart and the 38% retracement level of the entire uptrend from the March pandemic low, we have not made it back to the 38% retracement level. We've made it to the 23%. That's the minimum retracement level required. So it is possible prices could rally on from here and move straight up to that 80 cents. But as I shared with you earlier, this ABC move off of the August low is putting a little headwind into this new uptrend. And so what I think we're going to see happen is we will get another leg higher, probably up to the 77 cents, and then we'll come back, retest this 71-cent low, possibly work ourselves back down into the 69 area, the 38% retracement level. Who knows, maybe we could even see some deeper levels down here near the 61%. So I think eventually what we're going to see is I think we're going to see 77 cents first up here. And then after we see 77 cents, then I think we work ourselves back down towards 69 or possibly even 64 cents. And from there, that's when I believe Australian US dollar is going to find its footing and make its run up to 80 cents from here. So I think the trading opportunity is that if you're a shorter term intraday trader, maybe you can ride this rally up to 77 cents. But I think short traders are going to have their time in the sun coming up when we get up into those mid 70s. Another trend line to keep an eye out for as well is that if we draw a trend line from that May high and cross the June high, and it comes right into where that September high has interacted as well. So as prices rally, look for a little bit of a reaction to take place near 74 cents. But eventually a move up to 77 cents does not have to happen. But I think that might be the fake out that would reset for prices to plummet down and retest the low at 71 cents or possibly even 69, which is where the larger 38% retracement level is sitting. So that's all the time that I've got for today. I want to wish you all the best of luck in your trading. We will talk to you soon. Make sure you hit the subscribe button below. Feel free to leave any comments and have a good day. Talk with you later. Bye now.